Gold just crushed through $4,000 an ounce. We're talking the highest price in history. And everybody's asking the same question. Is this the new bull run? Should I buy now? Or am I already too late? In this video, I'm breaking down exactly what's driving this rally, who's behind it, and whether this is a real opportunity or a warning sign. What's up, everybody? I'm Clark. If you want to actually understand what is happening with your money and the markets, hit that like and subscribe button. Now let's dive into what's really going on with gold. Here is the scale of what we're looking at. Spot gold surged past $4,300 an ounce in mid-October. That's nearly a 20% gain in just a few months. The biggest gold ETF, GLD, is trading near record levels, and some major banks are now predicting gold could hit $5,000 by 2026. This isn't just a blip, this is one of the fastest, strongest rallies we have ever seen from gold. So what's actually driving this move? It comes down to just four forces colliding at once. First, the Federal Reserve and interest rates. Investors are betting that the Fed will continue cutting rates. Think of interest rates like the bonus you get for saving money in the bank or buying bonds. When that bonus is big, people love bonds. When that bonus gets smaller, bonds aren't as exciting. And gold starts looking much better because it is safe. Right now, investors think that the Fed will lower rates soon, so gold is getting more attention. And second, the weakening dollar. Gold is priced in US dollars. If the dollar loses strength, it takes more dollars to buy the same amount of gold. That pushes the price of gold up. Third is the safe haven demand. There's a lot of uncertainty, trade, tensions, global conflicts, and elections. When people feel nervous, they look for something solid. Gold has been the safe choice for thousands of years. And fourth, this one is important, central banks are accumulating. China and India have been buying gold at record levels. India's central bank holdings just crossed $100 billion for the first time ever. Here's why that matters. When central banks buy, they don't day trade it, they hold on. That steady buying creates real demand and helps push the price higher. But let's be honest about what is also happening here. Psychology. When gold hits new highs, FOMO kicks in, fear of missing out. Traders chase the rally. Retail investors see headlines saying gold hits $4,000 and suddenly everyone wants a piece. And that makes sense because gold isn't just a commodity. For thousands of years it's meant one thing, security. So when people feel uncertain around the world, gold feels like the safest bet on the planet. Before you rush out and start buying gold bars or loading up on those ETFs, let's talk about what could actually go wrong. First, expectations are sky high. If the Fed doesn't cut rates as fast as the market is pricing in, that could take the wind out of gold sales really quick. Number two is the dollar could bounce back. If inflation stays elevated or the economy surprises to the upside, dollar strength could return, and that puts pressure on gold. Third, the short-term temperature is hot. After a 20% move over the last few months, some analysts are pointing out that gold could be due for a pullback or a cooling off period. Yes, the fundamentals are solid, but we could also be at near peak of a cycle. If you're thinking long-term, gold still serves a place in a balanced portfolio, but think of it as insurance, not a lottery ticket. If you want exposure, here's how to think about it. ETFs like GLD or AIU give you instant exposure without dealing with physical storage or security headaches. Physical gold is also an option if you want to hold something tangible, but know that the premiums can add 10 to 15% to the actual spot price. You can also invest in mining company stocks. These stocks often move even more than gold itself when gold prices go up. Mining stocks can jump even higher, but here's the catch. When gold prices fall, these stocks can drop even harder. This adds more risk and volatility. Gold isn't about chasing quick returns. It's about protecting your purchasing power and hedging against volatility. So what's really happening with gold right now? It's a perfect storm of monetary policy, global uncertainty, and investor psychology all hitting at the same time. Will it keep climbing long term? Probably, but don't forget, even gold corrects, even gold can drop. So be smart about it, stay diversified. If you want some gold in your portfolio, pick a percentage and allocate that towards gold. And remember, invest smartly, not out of FOMO. Let me know in the comments, are you buying gold or do you think it's too late? Thank you so much for watching and I'll see you in the next one.